My name is Andy Ho. I am the Chief Investment Officer of VinaCapital. I also look after the VinaCapital Vietnam Opportunity Fund, which is referred to as VOF and listed on the London Stock Exchange. The aim and objective of VOF is to make long-term investments into private businesses in Vietnam. We plan to hold on to these investments for a period of 3 to 5 years, after which we'd like to take them public through an IPO listed on the local stock exchange, or take them through a trade sale to return proceeds and profits to our shareholders. VinaCapital is uniquely positioned to manage the VOF trusts because we have a solid track record. We've been managing this trust since 2003.
We have over 150 staff, of which 70 are investment professionals. We have made over 200 investments in the trusts since inception 2003.
The leaders of the businesses, and by and large most of the investment professionals, are Vietnamese. We do live in Vietnam. And I think the uniqueness of all of this is that we are well known in Vietnam. We can source good investment opportunities. We are one of the largest, if not the largest, investment institution in Vietnam.
Today the fund is over $1 billion in assets under management. Over the past 3 years, NAV per share has increased over 82%. The share price over the same period has increased over 90%. If you compare that to the Emerging Markets Index, the MSCI Emerging Markets Index, that's only up 30% over the same period.
We've been able to deliver the solid return on the back of the fact that most, if not all, of our investments focus on private businesses. If you look at our NAV today, over $1 billion, 90% of that $1 billion will enter when the businesses were private, or we negotiated a private set of terms to enter into these businesses. And over the years, these businesses have done very well. We've unlocked value in these businesses and we've taken them public, or we've taken a lot of these companies through a trade sale. So the uniqueness is that we are able to source large opportunities that are private and not available to the public or general market, and unlock value and deliver that value over a period of 3 to 5 years to VOF. The international trade war does have many impact on Vietnam, but the two key areas that we focus on is the FX, or the local currency against the US dollar, and the diversification of manufacturing into Vietnam. We do see the local currency under a bit of pressure against the US dollars because regional currencies have devalued against the US dollars, but fortunately the pressure is minimum because Vietnam has over $60 billion of reserve, which is over 3 months worth of import. And as a result, the devaluation year-to-date September 2018 has been less than 3%.
Vietnam is not immune to the ongoing trade war between the US and China. However, we stand to benefit from that trade war. Companies with manufacturing bases in China are now looking to Vietnam as an alternative. In particular, when we have labor costs at 1/3 the level of China, it makes Vietnam a tremendous opportunity and a tremendously interesting place for companies to come and set up manufacturing.
On the manufacturing front, we are seeing a lot of multinationals diversifying themselves away from China and into Vietnam to take advantage of the local labor costs, which is 1/3 out of China, and effectively diversifying away from the potential of having to pay tariff for importing goods into the US. So effectively, multinationals are diversifying rather than shutting down the factory in China, but they're diversifying into Vietnam.
Deal sourcing is key. We've been investing into Vietnam for over 15 years. We've invested in over 200 businesses in this portfolio. Over those years, we've been able to build a tremendous network with the business leaders and entrepreneurs in the country.
VinaCapital, we've been very fortunate to have a very strong, well-recognized domestic brand. We have a strong network of relationships with business leaders, government leaders, consultants, etc. This helps us source great opportunities to invest in Vietnam. We're able to see most opportunities that are over $10 million to invest in. Our challenge is really to focus on great businesses in sectors that we like. The sectors that we like are those that contribute or benefit from the growth of the domestic economy.
We focus on sectors that benefit directly from the rising consumption and the rising middle class. Sectors include consumer staples, food and beverage, healthcare and education, real estate and construction, financial services. These sectors represent over 70% of the portfolio, and the opportunities in these sectors remain tremendous.
We have a growing population. We have a GDP growth of 6.5% to 7% per annum. We have a 2 to 3% migration rate between the provinces to the city. All of this creates a tremendous demand for basic goods and services. And frankly, that's where we focus our investments. We focus investments in sectors that deliver the basic goods and services for society.
Looking ahead in 2019, we still see opportunities in deals that are private or privately negotiated in nature, where we're able to command terms that are not generally available to investors that are in the market.
We also see opportunities to take on companies that unfortunately have had a lot of sell-off because of the emerging market volatility. So by and large in 2019, we see a lot of opportunities to invest in undervalued companies as well as to invest in businesses where we think we can add value, particularly those in the consumer demand-driven space. We see businesses such as food and beverages, we see consumer goods, electronic goods sectors are going to grow dramatically as the wealth of the individuals continue to grow in the coming years.
The key challenges to Vietnam and VOF looking ahead is currency volatility and ongoing volatility in global markets. Vietnam is increasingly correlated to global markets, and currency volatility is always of a concern to institutional investors that invest into markets like Vietnam.
Vietnam is considered a frontier/emerging market. As a result, we do see a lot of volatilities in valuations as well as liquidity. This is driven by a lot of what we call short-term money or short-term capital coming in and out of Vietnam on a short-term basis, which can drive valuations up and down quite rapidly. Thus, we have a lot of volatility in valuation. The other risk that we have to keep an eye on is FX. Though I mentioned earlier that the local currency is under pressure to devalue against the US dollar, fortunately the devaluation is minimum. It is something we are keeping a very close eye on at the moment. The challenge for VOF is to continue to seek and invest in great private businesses. Over the last 12 to 18 months, we've reviewed over $1 billion worth of opportunities, yet we've only deployed less than $100 million. So the opportunities are plentiful. However, great opportunities, the ones that are strategically fit for VOF is still minimum at 5 to 10%. So our challenge is to continue to seek those great opportunities for VOF.
VOF is the best investment vehicle to gain exposure to the Vietnam growth story. It's listed on the London Stock Exchange, it's sterling quoted, it trades at a discount, it has one of the highest liquidities of any fund that invests in Vietnam. It can invest across the entire spectrum, from private to public investment opportunities.
It's a good time to invest in VOF at the moment for a number of reasons. On the macro front, we have a Vietnam economy that's growing at 6.5% to 7% per annum. We expect this growth to continue for the next 2 to 3 years. We have a population that's moving rapidly into the middle class. Around 16 million people are considered middle class today. We expect over the next 2 to 3 years that number to reach 30 million people, which puts tremendous demand for basic goods and services. And these are the very companies and sectors that VOF focuses on today. And further to that, emerging market volatility has been quite high lately, creating very attractive valuations for businesses in Vietnam. At the moment, valuations in Vietnam is between 16 to 17 times earning. There's a theory that if the valuations move into the regional average, which is around 20 times, then we would have PE expansion. Further to that, a lot of these businesses, and most of the ones we invest in VOF, are expected to grow earnings anywhere between 18 to 22% per annum for the next 2 to 3 years.